Welcome to today's podcast. I'm very thrilled to introduce our special guest, Johannes Forthmann. Johannes is a highly respected German economist and a trader with over 20 years of experience in the futures market. He has worked for a Swiss commodity and asset management company and is the author of a very renowned book on order flow and profiles. Okay, his insights and expertise are invaluable for traders and economists alike. Johannes, thank you so much for joining us today.
Thank you for having me. It's a pleasure to be here.
Johannes, just if you could, start by sharing a bit about your background and how you got started in the futures market.
Well, I was born and raised in Germany and achieved a university degree in economics. Started working, but got more and more interested in trading. Bought all the trading books under the sun I could buy, but found out that it is all history because the structure of the industry changed in the 90s. It is dominated by institutional trading, and they do not apply so much technical analysis, but they know what the retail traders are doing, and they fade them very often because they are not out for charity.
Right.
And it's a So I got a little bit disappointed, and in the early 2000s I traveled to the US to get trained by a very known, experienced futures trader. So I was trained by him. Afterwards, I went my own ways, evolving some own approaches, which are based on correlations, on intra-market correlations, including fundamental issues. And I got better, but I never achieved a kind of consistency I would have liked to achieve. So in 2015, more or less, I got over some profiles, found they helpful, and included them into my trading approaches. And ever since then, I'm quite happy with what I do.
That's good to know. In a sense, I'm glad that you found something that is working in the market, because if you hadn't found, I wouldn't be the profitable trader I am, because you got me into order flow. I picked up your book one day and it changed the way I look at markets, the perspectives. So you were the first one to actually, in my opinion, to bring profiles and order flow together, so that you could tell the traders or make them understand that there is structure and then there is order flow on top of it that you can use to time your entries. But I'm glad you did that. Moving on to our second question. Okay, with over 2 decades of experience in the industry, and this is my personal question to you, what are some of the key lessons that we've learned that you think every trader should know, and you think every trader in India today, given the market conditions, the volatile conditions, that they should know?
Yes, the first thing I would like to know traders that if they enter as soon as they open a trading account, they are entering an industry which follows the laws of the jungle, kill or get killed, and they should know about this. And because this industry, they apply the 90-90-90 rule on you, which means 90% of all retail traders lose 90% of the trading accounts within 90 days. In the US, it's even faster.
Wow.
There's a burnout rate of 6 to 7 weeks. And also the broker, I don't know how it is in India, but also the broker, he makes some money out of you, because on every trade you take, he automatically takes the opposite position. So a broker will love you when you make a lot of trades and lose money, and he will hate you when you trade less and have some winners.
Makes sense. I think this is exactly what is happening in India. Recently, the SEBI, which is our governing body for markets, as well as our biggest broker, Zerodha, published data about how many people are profitable, and this 90-90-90 rule definitely applies to it. It's backed by data. It's shared by the biggest broker and the SEBI, which is our governing body. I think that's playing out in India as well. What was playing out, 10, 15, 20 years before in the mature markets that are now, but maybe US, European markets were going through the same cycle what India is going through in the 90s or the early 2000s. Um,
And there is another thing I would add to it,
mm,
because a trader should know, a trader who starts out should know that there is no amateur league in trading. You play right away against the champions, and this needs some preparation.
hmm. That's actually a great point that you're bringing up, because one of the key things what I did not do was stop listening to others. I think when we were having a conversation before recording this podcast with you, you did specifically tell to me that try to follow what the market is telling you, try to be in union with the market, and do not
Yes,
that's something very important to do as a new trader, I think.
this is what causes the most losses in the beginning of my trading. I listen to opinion, I listen to colleagues, I listen to newspapers, I listen to predictions which you can get 24 hours a day in the news. And as a trader, you have to be humble, you have to form your own opinion and accept what the market offers you. If you ask the market too much, you get punished.
Yes.
And another important thing is you have, as a human being, when starting to trade, you have to recognize your weaknesses. Every trader, even the best traders, have weaknesses. And if you are not able to recognize your weaknesses, the market will tell you, and this can become expensive.
Yes, it can be very expensive if you don't work on your fears and greed, which are the two common weaknesses in every trader when they start off. I would suggest everyone to pause this video and go back and listen to this. Is possibly one of the most common advice, but most least understood advice that people, even when I was starting my trading career, people did tell me that, Angad, you don't have to be greedy in the market, or, fear taking entries in the market. But I didn't actually understand it until I lost a lot of money. Okay, so I would suggest all the viewers here to stop, instead of learn from our mistakes where we've spent so much money doing that, so that you can use the capital to take entries in the market, which
Uh, yes, there is another thing. The markets always change in between chaos and order. And if you do not understand certain situations or what is happening, do nothing. Wait for opportunities, wait for situation where you find your understanding again.
yes, I think if we can sum up this entire question is to, try to understand the markets, try to be patient, and try to see what I have learned in my experiences. There is 80% you in the market. There is only a few times when the market is giving you clarity, and that is the time when you should take entry. But most of the time, it is a battle of, when the market is not certain, it's better to, no trade taken is also a good trade taken, is what, a lot of my mentors have told me. The ability to
Yes,
stay out of bad markets is what makes you a trader.
yes, I'm doing exactly the same.
Perfect. Which brings me to my next question, actually. And let's go back to your book on order flow and profiles, the next generation of day trading profiles order flow, Delta, right? Which is quite popular, to say the least. Could you explain the importance of understanding order flow and market profile for traders who do not know these two concepts today and have are watching this video currently?
It is difficult to understand, to explain this quickly,
Quickly.
because even on my books, there is people who like it very much, but they have to read it 3 or 4 times.
Yes.
Um, well, the profile theory in general sees the market as a permanent auction process. To give you an example of real life, I saw when I was in India, I saw a lot of small shops. Imagine you sell a product and you sell it very well. Then you start rising the price, and then all of a sudden you see that it is not accepted anymore.
Yes.
So you have to bring down the price again if it is not accepted at a certain level, and after until it goes back to value where the most people bought it. And this is what happens in the markets day after day. Prices tend to return to the mean if they do not get accepted at a certain level. And this is all about market profile. It's like an inner clock of the market. And the order flow, for me, is only the last part of a whole chain of analysis, which leads me from the macro zone to the micro zone. And then I'm looking at the order flow. I consider the order flow as a timing instrument to do the last step in getting a good entry. And this is how it is all interconnected, market profile and order flow. Uh, the best risk management you can do is to have a good entry. And this is what is the order flow very helpful in for me. But I do not apply very complicated order flow methods like level 2, heat map, or book map. I do not need this. If you get into a certain understanding of the order flow, connecting it to the context, then it serves you well.
Understood and understood. So to encapsulate that, if people don't understand what is market profile, get into Google or YouTube auction market theory. What sir is selling, what Johannes is saying is, first learn how the market works. It has some key characteristics that you can see in every market, even the housing market, your local vegetable market, and also the our futures derivatives market, which is just faster, I would say, right, than the local housing market. So first learn how markets work. That's basically auction market theory. And then on top of it, use order flow to actually judge your entries, have small stop losses, have better entries so you can have better risk reward. It also helps a little bit with psychology as well when you have good entries. I think great. So far so good. Tell me one of your big challenge that you had in futures market as you were growing into a professional trader, as you were progressing and working on your skills. What were some of the biggest challenges that you faced in the futures markets, and how did you actually overcome them?
Well, when I had some losses, the best thing for me always was to refrain from trading for a while.
Difficult.
Because once you have listened to false gods, it is difficult to get them out of your head. It's the same with an unhappy laugh. Yeah? You get confused, and you need some time to get over your losses and to think about it and try to find something else, having a fresh start. It
Mm.
does not make any sense if you have a losing streak when you start doing some uncontrolled trades, some vengeance trades, and so on.
Mm.
So what I did is I just refrained from the market 3 or 4 months to get my head clear again and
Wow.
look for my mistakes. That's the most important thing you can do as a trader. Do not look for your winners, look for your losers, because there is always some kind of mistake involved. You have to find this. The winners, they go for themselves, but the losers not.
Yes, I think what you're trying to say is, detach yourself from the markets, go back, do your homework, get into, why you lost, add to your playbook. So, point number one, always have a playbook, record your trades, understand what went right, what went wrong. Take some time off, which is the hardest thing to do, in my opinion, is to take some time off from the markets, because one key statement I remember when my mentor was teaching me, he said, Angad, the markets were there before you were born, and the markets are going to still exist after you die. So It's okay to take a break and come back to the markets. I think that's worked out really well for me in the past when I was getting into revenge trading and thinking about, oh, I lost this amount of money, x amount of money, and I will go back into the market tomorrow and take that money back. No, the market's bigger
That's
than
it.
you. Market's very random. You cannot decide the outcome of the next minute, let alone make back your loss. So great advice so far.
I can tell you an example out of my early days. I read a several hundred pages book called "At the Crest of the Tidal Wave." It was about wave theory, and after I
Yes.
finished the book, I was really scared. I would think that the world is collapsing every morning, every day, and I ordered subscribed for a newsletter of this theory, which I ordered in the US, and they gave predictions for the Dow Jones, but
Hmm.
this prediction never worked. So I lost a lot of money, and I was really thinking to stop trading forever. But the funny thing about this, 10 years later in Germany, a guy came to me and said, "Oh, you have to apply this new theory, and you have to refine it with Fibonacci numbers." So if I wouldn't have made these mistakes 10 years ago already, I would have believed in and start a, a new nuisance which would have brought me even more unhappiness.
Wow. So that got you back into trading, even though um, it might be slightly, Fibonacci is something that I slightly believe in, slightly do not, but it still got you back into the markets to, take a fresher perspective towards the market and apply new theories to it. And I guess that's why you are here and what you are right now is because of, consistently trying in the markets and not giving up. Obviously, managing your risk is a big part of that as well that goes with it. Anyways, good to know about your biggest challenges. I think most traders in India would are going through this exactly same right now. Nothing's changed in my opinion. 20 years back, today is the same thing because human psychology is pretty much same, right? Quite interested in understanding your experience working for a Swiss commodity and asset management company and how it shaped your career. Just a small, side. Just curious about it. What shaped you as who you are today. It's
Well, I worked there for a couple of years because I had a good personal relationship to the CEO of this company. They were more into hedging. They were hedging, for example, the harvest of big Argentinian soybean farmers. This colleague of mine, he knew a lot about oil, so I learned a lot about oil industry, but. Uh, I always sticked with the short-term day trading, which was always my major interest.
interest. Understood. Given your extensive experience, what are some of the current trends that you see in the futures market that traders should be aware of? Any predictions for the near future in the instruments that you trade regularly? I know
Oh,
prediction is a big word, so
well, you should be prepared that there will be some more volatility because it's not a healthy market environment we have at this moment. We see a handful of big tech stocks leading the whole market, and this is not very healthy. It happened the last time in the 1960s when only 3 or 4 tech stocks dominated the whole market. Apart from this, we have some geopolitical risks all over the world, which we did not have for a long time, and all these kind of things can become the catalysts of some corrective moves. So I wouldn't be too euphoric of that the market will gain further upside or will continue this big bull move we saw. I would be also be alerted to take some opportunities on the short side when they come. You saw them already coming a couple of days ago
yes.
when some big tech companies disappointed with earnings,
Earning.
and the market took a tumble.
Yeah.
So you have to prepare for corrective moves as well.
Understood. Be cautious with longs. Understand the microeconomics of the world today. Be ready for some corrective measures, but do not marry to this idea that there's a fall coming down. Always be ready with your context, and only if the context supports it, then this macroeconomic ideas will play out. So yes, be keep a lookout for these corrective measures, but always trade what the market gives you. I think would be the right advice here for new.
Yes, and there's another thing you will experience as a trader with the year. There's a left half of your brain which is logical. The right thing is experience and intuition, and this intuition forms with the time, and you will enter a certain stage where you also listen to your intuition. You can't explain everything with formulas or with your setups.
Very interesting.
If the, yeah, and I you cannot explain it, but you need some kind of intuition, and this intuition forms automatically the more experience you get with the market.
I can actually give a secret, which is not actually a secret to the viewers, how to form your intuition. Have a repeatable process that actually works, and then practice day in day out, so it becomes second nature. And eventually, it's like just playing any high performance game, right? So if you practice well, let's take the game of cricket, and if you know how to hit a six on every ball, but you have to choose your balls well, otherwise there is high risk involved as well. With enough practice, you will do this effortlessly. Your mind body connection will become better, and you will start seeing patterns. And I'm not talking about technical patterns here. Patterns about just understanding so many things at a time that it nearly becomes almost like an art for a day trader. And that's where discretionary traders, I would say, are different from a systems trader. Although you require systems, but the discretionary side of things is where you formed a certain level of intuition in the market, trading the same instrument for the past hundreds of days, that you can start building this. And once you start doing this, that's where actually I would say personally, your professional trading starts, because it is all about discipline, and b, how to use that discipline to practice daily, having a good system, having a discipline, and then you would probably the art in the intuitional part of this skill will start coming out of you.
That's it.
Perfect. What advice would you give to someone who is just starting out today in the futures markets?
Well, start out with small money.
Makes sense.
Get confident, get conviction of what you do. And I already repeated it. Do not look at your winners, look at your losers. Look for a mistake, because there's always a mistake involved. Do not get too euphoric when you have a winner. And well, that's it in general. And keep on practice. If you want to become a good cricket player, you have to hit it 1,000 times until it goes into your mind.
Understood. Yeah. Are there any specific tools or resources that you find particularly useful for trading that you would recommend?
Well, I sometimes look at the inter-market relationship, which forms a fundamental base for the market. Let me tell you an example. If I trade oil and have a look at the big picture, I have a look at the product of oil. The most important product of oil is gasoline. And if I see a big divergence in between the two of them, they normally move parallel. If I see a big divergence in the two of them, I prepare for a kind of correction of this disbalance. Yeah, the same you can You can see in the gold and the gold miners. You can see that in the S&P 500 and Nasdaq. Yeah, you can see it sometimes in the Nifty, comparing it with a big stock like Reliance and
Plans.
so on. So I have got some intermarket relationships. I watch out to see if the market is in a healthy balance, and if it is not, I prepare for some trade opportunities.
Very interesting. I when I'm trading crude, I'm gonna take this advice and keep a watch out on gasoline. Understood. Okay. Um, Very basic question, but probably the most important question of a trader's life. How do you approach risk management? And I know it's a broad question or to unpack in such a short time, but I would still want you to know have give our listeners some practical tips or something. How do you approach risk management in your trading strategy?
Okay, it depends from your strategy. If I
Okay.
scalp or if I do something else, but I have mostly the same approach. A first thing I do on every trade after establishing a trading plan, that I set some initial stop. Yeah, initial
Okay.
stop.
Makes sense.
After that, I work on a mental base. I see if the trade gets momentum or not. If the trade does not get momentum, I get out with all of my position. Either I have a small winner or I have a loser. I don't care about it. If the trade does not move in my direction and does not give momentum, I get out. I also get out if I see that my trading idea, my trading plan is not fulfilling anymore. So many times I'm out before the price reaches my initial stop. I always have to see the dynamic of a trade to decide if I stay in or out. There's another thing which people tell me, it is the take profit aims method. I do not set take profit aims because I have to see how the market is evolving. If the market evolves a strong momentum, it can hit through a PUC and it can go everywhere. And if I see that, I stay in the trade. And if I see that the trade does not have enough momentum, I would also cut it out or liquidate it before it reaches a certain take profit goal.
Amazing.
Because when you start a trade, you don't know what
Yes.
happens. You are not a clairvoyant. Who in the earth can tell you where the trade is going? So I do not cover these theories about take profit goals. I hope you understand what I mean.
Yes, absolutely. In To sum it up, you flow with the markets, and as soon as the flow is changing, based on your experience, you either decide to cut out or ride the wave. But you cannot know beforehand. How far the outcome of the trade would be. And as
Yes,
a
and there is another thing. I see a lot of students when they start,
yes,
they are
one
not
is to
very confident and they try to trail their stop immediately. You have to give a chance to every trade because whatever trade you do, you will experience a small retracement. So if you are able to enter a trade at the right time, you do not trail your stop immediately. I only get my stop to break even or to trail my stop when I see that the trade gets momentum, because lots of people get too greedy and they get stopped out when the big move starts.
Yes, it has happened to me quite a few times initially. Uh, Before I understood, you have to be comfortable with the outcome that yes, you can also lose money in every trade that you're putting on. So first be comfortable that okay, that's the fee. Your stop loss is the fee to enter the markets for the opportunity. That's the risk you're putting on onto the markets, and you should be comfortable with it. Give it some breathing room for the move to play out.
For
I
the
think.
trade to evolve, do not trail your stop immediately. Do not set tight stops immediately. That's good for the broker, but not for you.
It, I'm glad I asked you this question. I'm going to try to teach my students more about this in the future. I think this is a very great point that you're making. I have a very small question regarding this topic that we just got into. Is like, is there? I know it's very hard to put a number on this, but still, I'm going to ask you this question. Is to, in your experience, how much time goes by until you realize that this trade is not going to work out, there is no momentum coming in? I know the time will vary from trade to trade, but in your experience over the years, you could probably judge it by saying it. I'm
Well,
already.
I apply some general rule. If I enter, let me say, on a 3 minute candle, and I see that within the next three candles there is no change, I
Perfect.
get out.
Perfect. I'm gonna
It's
apply.
you have to apply your personal
Yes.
your personal tolerance.
Risk tolerance.
If I do not see a market moving after three candles, I get out. And for me, also very important or essential is the market has to have follow through. If you apply, for example, some order flow technique and you see absorption, and the market has to get follow through after this. You have to see a delta change. If you don't see a delta change, if you don't see anything and nothing happens within the next three candles, it's better for you to go out.
Listeners, take note of this. I think very practical tip here given by Johannes. A very refreshing and a refreshing perspective to the markets. Not the run of the mill that you get in and around. That it has to hit certain level, or if the RSI is this or that. Just a general rule that is made. If you don't know what to do currently in today's market, just apply this rule and try to test it out. Don't go with the same, okay, I'll just keep three candles. If it's not working out, try and test out. I think very good fresh perspective in the markets that Johannes is giving. Keep your notebook aside, jot down these points.
There's one more nice sentence I learned in the US from my ES mentor. He expressed it like this: "When in doubt, stay out."
I'm gonna write that down, to be honest. Yeah,
When
doubt,
in
stay out.
doubt, get out. When in doubt, get out.
Makes sense. I'm gonna print this out and post it on my wall here. When in doubt, get out is a very strategic. It in itself is a strategy, in my opinion, to safeguard your capital. Great. I'm loving this conversation we are having this so far. Any future projects that you have, Johannes? Any upcoming projects, goals you are excited about? Any plans to write another book? Create educational content?
I know very well German stock, very well known German stock analyst, and he asked me to write a book about order flow of stocks and
Amazing.
profiles on stocks. And thankfully, I found huge software making 447 US
US.
stocks and ETFs available. So I'm writing a book about this now. And the other project I have is that writing an online course with all essentials trader should know, and this will be translated in Hindi then.
Amazing. That this is good news for us, because we've been reading your books, and we've been lacking this kind of excellent educational material currently in our markets. And I'm not saying that there is no great content. It's just not found easily on YouTube, because there's a lot of fake gurus, a lot of bad advice. 99% of the time people are giving out this huge content that is, people really don't know what is right and from wrong, especially if it comes from you, who is a respected author who spent time into the markets. And if it is easily communicated in their native languages, I think this doesn't get any better than this, to be honest, guys. Leave a comment down if you want Johannes's essentials course to be translated into Hindi. Let's put some pressure on him to do that. Just kidding. All right, let's move on to the second half of this podcast with Johannes Forthmann. I know you've all been waiting for this part of the interview as well. Many listeners have been eagerly waiting for this. Johannes, we would love for you to reveal some of your key trading strategies that have contributed to your success over the years. Give us some of your secret sauce here. Your primary trading strategies, methodologies, approaches, examples, whatever you can impart in this the next 20 minutes. Important stuff for our viewers. Please do get on with it. And I think I will have to make you host for this. So let's make you host. Yes, I'm making you host. And I think you can now share your screen and give us some really great insights on how to approach our markets.
Well, I'm not I'm not well into the Indian market, but
Yes,
I studied this for 2 days now,
thank you.
and I found more or less the same you see on other markets as well. What I look for in the first part is the most important thing is you look for congestion, you look for liquidity zones,
Yes,
and you also look if the market, if the general market is confirming what, for example, the big stock is doing here. You see Reliance getting into a downtrend, but you see the Nifty making a new high, and then
perfect.
you get starting alerted. You're looking for some micro and macro zones. For example, on the left hand side, you see a single print here, and prices are hitting the single print zone again, and they give you, this is the 15-minute chart, but you can filter it even down on a 1-minute chart once you have the big picture. Yeah, and you get some other entries here. This is a big daily trend. If the market hits a single print zone for the second time, like you see in this white arrow, you can also go for a poor risk trade. Yeah,
Yeah.
you and you even see it here. The market forms a single print zone
Hmm.
on the 1 minute time frame. You
Right.
would see a small trading range, but you would see that the market is not able to overcome the single print zone to the upside, and this is
Yes.
what you're seeing here, for
Is,
example.
is
Yeah.
that is that called also called an excess? Although on a micro.
You mean the top of the Nifty,
Yes.
or
Yes.
yes, yes,
Single trade.
it's an excess movement because
Right.
the stock market is oriented to the downside,
Right.
and this probably happens because, well, you have to look to the left side. Then this probably happens because the Nifty is taking out some stops over there before it joins the broad market.
Understood.
Uh, you
Hmm.
look for divergences in this way, and you will get a clue what the market wants to do. Let me show you another example. You see the same situation here. You see some sideway movements, and this is the most important structure of the market because in the
Yes.
sideway movements, um, big traders build up their positions.
Yes.
You see
Equity.
another, and I really try to, for example, here I
Yes.
have drawn in the POC of this
Hmm.
liquidity zone,
Yes.
because what happens mostly is before a big move starts, it goes back to the liquidity zone of the
Yes.
POC,
Yes.
takes out the orders, takes out the stops, and then the real move starts, because big market participants need the orders of other people to move the market. And I also look for false breakouts. You see two trading ranges here. You
Hmm.
see that the trading ranges are almost overlapping. The
Yes.
market is not able to form a new base here.
Right.
It forms overlapping liquidity zones. This all in all tells you that the market shows weakness to go further up. And then you see a false breakout. You see the Nifty making a new absolutely high. Yeah.
Right.
and which is another sign for you that there is something going wrong. And this is also a great trading opportunity. And if you filter these kind of situations down to a minute chart, you will see micro levels where single print zones are hit and so on. I like single print zones. I like watching trading ranges, and I like to watch deceptive movements like you see here. I never trade a breakout here, because I had so many losses in my first years of trading, trading breakout, that I always refrain from trading a breakout. It's a big temptation to trade a breakout, but you see what happens here. It goes into nothing, and then when the deception comes here, then you get a big move. So imagine you are in a trade here, you trade a breakout, and it goes up, down, up, down, up, down, up, down. You are in the middle of nowhere.
You get
And
whipsawed.
this is why I get out when I see there is no follow through.
Understood. I mean, key point here to understand is market is not going to be so obvious that it's breaking out of a range and it'll give you free money. You've got to trap a few people, grab some liquidity before move people out of the market so that they have better fills at the end of the move, right?
Yes, yes.
Uh, Understood. Yeah, that's a great example. Any more examples that we have to go through? This is interesting.
Uh, Let me see. This is a very simple example.
Okay.
Many people, most of people, they learn nothing more than trend lines or trend channels. And if you have an ascending trend line, they think they are staying in the trend forever.
Right.
And some people also trade the breakout of ascending trend lines,
Right.
breakout of trend channels. And if you see something like this, you get very cautious, because you already see a downtrend here. And I would get alerted when I see this candle, and I would uh, look for a short trade in this opportunity. And you also see a divergence to the Nifty here, because Nifty makes a new temporary high, and which is not confirmed by Reliance. I don't know if there is some other interesting indexes which reflect the broad market, like the bank index. You can do this with all kind of indexes, if they
Yes.
are big enough to represent the broad market. Um, and this is one of my favorite here. It's the Nifty. It shows a pattern which I call everybody's darling. Yeah, this is what traders learn in their first lessons: a shoulder, head, shoulder formation. And if you
Okay.
see that the shoulder is taking out here and the market moves quickly
Right.
into the other direction,
Right.
you go for a short position. You can also, this is a 3-minute chart. You see
Mm.
that the price is reaching 2 times a single print zone. It's not able to go more into the single print zone. I would look on the order flow when I see this situation, because the whole market was decepted, and you are seeing a beginning momentum to the downside.
Amazing.
I tell you now. I tell you an example about crude oil. Crude oil is a very interesting market for Indian traders as well, because the core trading session in crude oil starts at 3 p.m. Central European Time, which
Right.
must be 6:30 p.m. Indian Standard Time. And this is a very good time for watching the oil. And I tell you something I watched over the years in the oil market. If you see 3 p.m. here, when the core activity is
Mm.
starting, you see the volume coming in here.
Yes.
You look for the first strong move into one direction. Yeah, you can also look for imbalances here, but you see that strong buyers are moving the market up. And this is the people who have control of the market. And then very often, or quite often, you cannot make a rule out of everything. Quite often it happens that the price returns exactly to where the strong buyers came in at the beginning of the core session. And I would look for a long entry in this area. You see, for example, you see a ledge here. A ledge is a mini parallel zone, and when you
Yes.
see a breakout to the upside with high
Yes.
volume, you are looking for a long position here. So you wait for a first move until you discover strong buyers.
Yes.
You wait for an hour until the prices comes back to the level where the strong buyers drove up the market at the beginning, and then
Mm-hmm.
you start looking for a long position. Yeah. And in this case, you see, I've got the order flow here. In this case, um, it's the same situation here
Correct.
with the order flow. There is one thing about absorption I found out over the year is what you see here is when the up move started, you see a pretty long candle,
Yes.
a blue candle, an up candle, but
Mm-hmm.
you see only a small delta candle. So what
Mm.
happens here is the price is leading delta. And this is a form of absorption também. Sorry, I mixed it up with Portuguese now. But this is a sign of absorption as well.
Yes.
Each time the price leads the delta, you have absorption, because otherwise delta would go up with the price.
Yes.
Are you with me? Do you
Yes.
understand this? Yeah?
Yes, absolutely, absolutely. So, just to sum it up, when the delta is pretty flat, it's actually equal buying selling pressure, but the selling pressure here got completely absorbed, and the little what buying pressure was there that took the markets up essentially.
Yes, the price leads delta. If you
Price
see
leads
price
delta.
is leading delta, you have momentum, you have absorption. And you see that this candle ends up with a POC in the upper third. This is
Yes,
also a very positive sign. If you see a small sideways congestion here, I call this ledge, and you
yes,
see a breakout here, and you have a long candle, and you have volume. The POC ends in the upper part of the candle. You can be prepared for a trend. So what I do in this situation, if I see all this, if I see all the context, and I see this candle, I see this kind of absorption here, I
right.
see the POC here, I say to myself, this could be the
You're right.
beginning of a trend. And if
Yes,
it is the beginning of the trend, price has to show follow through. So I
yes,
would go in somewhere here, but I would not set
stop.
a stop loss. I would say if prices retrace to this point, it is not a trend anymore. So
Yes,
I have the assumption that if a trend is evolving, there will be immediate follow through. So I do not. I set a pretty tight stop. I would enter here, and I
right.
would, as I told you, I would say price has to go to move up quickly now if it is a trend. And if it is no trend, I'm wrong. I'm out.
Yes,
I'm out in this case. I'm out in this case with a 10 tick loss. By the way, you can also trade the crude oil future for small money. I don't know if it is possible in India, but in Europe and the United States, you can trade
micro.
micro contracts of
Yes, we
oil.
do.
Then it's 1 cent is one tick is 1 cent. One tick is $1, and the oil market sometimes has smoother movements than the stock market because it is not a paper asset like a stock market, it's a
Right.
physical trading instrument
Mm.
which responds better to real demand and supply. And what I also look for, if I go in here, I see at the moment I decide to go in, I do not see any selling interest here. You have a a minimum delta from -1,
-1
and then I see a switch to an extreme positive delta.
delta.
As
Yes.
soon as I see this, I'm sure that I'm in the right trade, and then I would put my stop immediately, break even, and see what the market is doing.
This is one of the key trading strategies that I have used to, it's my bread and butter here. I usually look at absorption, then some type of exhaustion, and then an aggression coming into the market on the opposite side.
Yes, exactly.
And this key the key secret sauce, or I would say the key thing that people miss a lot when they initially start trading with delta is actually, delta is doing its own thing. It's a pressure meter in a way, but you always have to correlate it with the price. It's a relationship. It's the price to delta relationship is what you have to, I think, keep observing and understand the markets. If I may, is this right to say?
This is correct.
Okay, okay. Key
And
point to remember.
absorption is always involved with a kind of
Right.
uh, deception. You can also find situations where, for example, the price is moving up and delta makes a new low. This you can read in my book as delta divergence,
Yes.
hidden divergence.
Yes.
You can see a whole delta divergence where delta is moving down
Yes.
for a while, but prices build a higher base. And then you try to find the end when the divergence is resolving itself. And you have another look on the smaller time frame to get the right entry. There are
Perfect.
many forms of absorption,
Hmm.
and I think it is the most difficult area in trading. You
Yes.
have to get some experiences. You cannot define 2 or 3 setups and trading this all the time, and overall it has to be every time connected to the context. When I started out with the deltas some years ago, I got
Right.
very excited about this delta divergences.
Yes.
And for some days, I tried to trade every delta divergence I saw during the whole day. And it does not give me success because it has always been connected with the whole
Mhm.
context of the market. And this
Yes.
is what I explained you a few minutes before. You know that there were big or strong buyers sitting there, and they would come again. And this is when you look for delta
Yes, a lot of
scenery.
traders actually make the mistake of, just looking at absorption and delta divergence and taking a trade on it. Let's take as an example, if it's a positive delta divergence, you probably should, look at it and enter the markets at supports, not resistances, essentially. If price is moving up and delta is falling, it should ideally happen at a key support level so that it is the context supports it. If it's happening at a resistance, you may want to, skip that part. Not every absorption has to be played, not every divergence has to be played. And those who don't understand divergence, it's very similar to RSI divergence. Okay. But what you are doing here is actually using order flow. You're looking at key who is in control of the market. Let's say the price
Yes.
is at support, and there's a lot of shorts are in control of the market and they are selling, but the price is not budging. In fact, it is going opposite. That's exactly when you know that, okay, there are some key strong players or limit buyers who are holding the market here. And if the sellers get trapped here and they lose energy exhaustion, then it might just the move will come strong, because first, now that the market is going to hold towards downside, it will seek an area of liquidity somewhere on the top side. Second, there are a lot of trapped players who will help you, who will try to cover their positions as the market moves up and give you that extra boost that's required. I think
Exactly.
that is also key to understand is just don't blindly trade order flow absorption. Attach it with a key context of the market, right from a multi time frame, a higher time frame to your trading time frame. Am I right?
Uh, Yes, and there's another. Well, the ideal situation is when you would have in this situation when you have would have a red delta candle and
Mm-hmm.
a blue price candle. This is the simplest form of absorption, but it does not happen all the time. It also happens, and you have a wonderful indicator for this
Yeah.
with these vertical flashes.
Yes.
But let me tell you another advice. If you are, for example, in a down move, like the move before, and you see that delta, negative delta, becomes bigger and bigger and bigger, you prepare to leave the market. Yeah, because if delta gets an extreme position after a move, you should be prepared that this move will end soon.
Is that similar to the exuberance when it's in a up move? A climatic up move is what you call. Is that
Yes, it's
okay?
it's
Okay,
it's similar to this.
similar.
Yes.
Hmm. Okay, to those who are listening to us, don't worry. This is a short episode. These are some key concepts that you may not understand today, but at least you know what to learn next. Okay, so keep up with us. I will put some really great educational videos that Johannes has on his YouTube channel. All of you guys who've got some kind of value from this podcast, this kind of education, you will find all the links of Johannes's YouTube channel. Go check it out. If you're Spanish speaking, if you're English speaking, and I think there is another language that you teach in on your channel, show him some love. This is some really good educational content that he's dropping that people charge a bomb for. Okay, so just putting it out down there. Check the description box after you finish watching the video. Please keep continuing, sir. I think we went through most examples. Unless you have really a strong.
I've got one more for
Perfect.
you. This
Let's
is
do that.
euro. This is euro. I've
Oh,
got one.
forex.
The euro
Perfect.
forex. Yes. Yeah. If you see the euro starts trading heavily at 9 CET.
Mm-hmm.
Central European time, which should
Right.
be at lunchtime in India.
India. Yeah.
And what happens frequently, not always, but if you see that the euro is when it starts to trade the 9 o'clock, if you see the euro when the Eurex opens at 9 a.m. European
Mm-hmm.
time, which is
Mm-hmm.
12:30 India, if you see if that the euro is taking out the Asian lows, the odds for a long position are very good, as you see it here. This happens frequently also on the opposite side. If you have a top and you see the Asian highs are taken out towards 9 o'clock, you
Mm-hmm.
have a good chance that the euro will move after he has taken out Asian lows in this case.
Amazing. So, key thing to here understand is first thing.
And you can also look for the order flow on the euro in the
Mm-hmm.
mornings, but no more in the afternoon. I don't know why it is, but do not look when trading the euro in the afternoon in the second part of trading. Do not look for the order flow, because do not look for divergences, for delta divergences. I don't know, maybe it is commercial counterparts which are taken then. You
Right.
can use the order flow only in the mornings with the euro, in the
Yes.
European morning.
That's when the signal is more than noise, I guess, because these are decentralized markets. So you need more liquidity for clear idea, I think. Maybe the liquidity drops in the afternoon. I don't know. I have not traded forex for a long time personally. But key things to remember here: look for order flow in the mornings when the exchange
The
opens.
Asian stocks stops are taking out the Asian lows in this case.
Okay, understood. This is really interesting. I will look into this later on after this video. This could be really interesting to trade. If it's pretty straightforward to look for taking out the Asian lows or highs, and then look for an opposite move, aggression on order flow to enter and put your stop losses at POCs or under POCs.
You can also use the Swiss franc of as a
Mm-hmm.
filter, forex filter, because euro, US dollar, Swiss franc against US dollar, they are moving quite parallel because Switzerland will always adapt the exchange rate of the Swiss franc to the euro because they fear less exports and so on. But you can also plot it on a simple line. You have a wonderful way to compare two instruments in the compare function. If you plot the Swiss franc, US dollar, and the euro, US dollar in comparison,
Mm-hmm.
and have a look what happens when a top is formed. Then the two of them very often diverge.
Understood. So they are tightly correlated to each other. There's a
Yes,
tight
yes.
coefficient between them.
And
Ah,
you
interesting.
you do this on a 5 minutes or on a 15-minute chart to
Right.
have always a look at the big picture.
Understood. This is all of this, guys. I recommend you to stop the video, take these notes down, and go do your back testing. Okay. Anyways, let's move on to a few questions before we close. These are some personal questions that I've my personal questions and some questions that the community has asked. I went out to the community and asked them what are some questions you would like to ask. Johannes here. Simple questions, very fast. It's a rapid fire round, so to speak. Okay. What are some technical indicators, or what are some tools, technical indicators that you use other than order flow, EMAs, anything else? If you would like to tell our audience in a sentence, like delta, order flow, what else? Market profile,
I
what else?
I hardly
Use.
use anything else. What I use
Perfect.
is this
Mhm.
intermarket
Relationship.
correlations I
Mhm.
use to get a fundamental overview of the market is possibly in this balance. Um, I do not use any other indicators, typical technical indicators. What I sometimes do is I will have a look at the VIX, at the
Mhm.
volatility index.
Right.
It can be also reflected through ATR. Uh,
Mhm.
if you are scalping and you are not well um, accustomed to get out quickly, you can use a Keltner channel, but it needs a certain um,
Settings.
certain settings. Yes,
Yeah.
but I do not use any other indicators.
Understood. Understood. How important is trading psychology in your strategies? How do you manage actually the psychological aspect of trading, such as dealing with losses and maintaining discipline over long time? Um,
Well, we already talked a
yes.
little bit about it. Everybody has different psychological problems. Um, I have a student. She does not gain uh, much confidence, and I think it's not so much a psychological problem. It's I see some people they get too much into detail. They do not see the big picture anymore, and then they get stuck in situations which do not turn out to be successful trades. The other psychological problem we already discussed:
Right.
do not listen to opinion.
Mm-hmm.
Yeah, um, try to get confident and try to recognize your weaknesses. Yeah,
Understood.
if you tend to have too big risks, try to work on it. Try to be humble. Do not get angry. Look for the mistakes, and
Yes.
this all together forms market psychology. Sometimes I find that market psychology is overrated
Thank
because
you.
if you do not have success with some methodology, you have to find some excuse. Yeah, and market psychology can also be an excuse for trading methodology which does not work. So
Thank you.
if you look at some typical phrases like you have to keep running a trade or something like this,
No.
it's you
No.
cannot generalize it because sometimes it's even better when you when you are out very quickly. Yeah.
Yes.
Um, and a market psychologist never knows what you have in your mind, and he cannot improve you right away with some sentences like you have to have patience and so on. Market psychology, in my opinion, is overrated. I have had a lot of students which have 10 years of training experiences, and they have a very good risk management, but they did not find the consistency. Yeah. And it's better to find something which works for you, and then
Right.
the psychology will improve automatically.
Right. Thanks for saying that out loud. It makes the two of us so people don't listen to me when I say that initially, if you follow the process, I think psychology doesn't even come into the picture, honestly. Yes, it comes into the picture when you take a bigger risk than your risk appetite, and then which you shouldn't be doing in the first place anyway, right? Taking on more risk than you can manage is in itself the wrong way to trade, and therefore it's not a problem of psychology, it's a problem of indiscipline. So I always tell my
Exactly,
students,
exactly. Hmm.
it's about discipline. You tell me, if you 100%, if you're disciplined, each of my student has never got any psychological issues, but there 99% of the people just don't are not disciplined, including me, when I have a few days when I myself break some rules and then I catch myself doing that. I think that is much more important than learning these esoteric concepts about, don't be greedy, don't be fearful. Instead, catch yourself while making mistakes and you will never have to deal with psychology.
Exactly.
I think great. One last question to end this wonderful 1 hour I had with you today. It's been, but it's personally helpful, and I'm sure it's going to be helpful to all of our viewers. Simple. One last question that I have for you is, how do you stay updated and continuously improve your trading? Now I know you've had experience and you are a very well respected trader, an experienced trader, but even you would have to stay updated continuously, keep improving your trading strategies or psychology or whatever, right? Any component of the trading career that you are having. Are there any specific resources, any practices you follow to keep improving? I think this is the most underrated part of our entire process, is to actually go back and continuously improve, look at your mistakes. Any helpful tips here would really help us, new traders, essentially.
Yes,
Other than that, that's the
yeah,
last question I have, to be honest, today.
I always try to find out, and this is important, what the market is focusing on.
Hmm.
For example, I have one student in my group. He publishes every beginning of every week which big companies are publishing the earnings. And if you, for example, have a day where Microsoft or another big tech company is publishing
Hmm.
earnings, you
Hmm.
should be focused that there will be more volatility in the market, respective to the earnings. And this is one thing. You keep going with the headlines of the news. You always try to find out what is moving the market. If you have a big banking problem
Hmm.
in Europe, you watch the bank index. For example, you study the headlines of the news releases to find out where the market is focused on.
Right. Is it right to say that you study the headlines to understand the overall market psychology, and if the market is actually doing what the mass psychology is thinking, or whether it's going opposite, and then you trade accordingly?
Yes, I try to find out how the market digests these
Hmm.
headlines.
The digest is a key word here. It's not about
Yes.
moving in the same direction what the market is looking
No,
at, how
you
it's
don't
being.
listen to any predictions, but
Hmm.
you try to find out how the market
Market
reacts to
reacts.
bad news and how the market reacts to good news. And it is if it shrugs off bad news and the market is going up, the worst stage is possibly over.
Amazing. Well, this brings us to the end of this conversation. Thank you so much, Johannes. It's a fanboy moment for me as well. Having learned from you in my initial trading career, having picked up your book changed my career. To be honest, so much of the trading success that I have had is credited to you, and I've already communicated that to you. But thank you so much, Johannes, for sharing your valuable experiences, insights with us today. It's been an enlightening conversation to say the least, especially learning about your key trading strategies and taking the time. 2 days before recording this is taken time to take out really great examples out of the Indian market. So I want each one of you followers, the viewers here, to like the video, share it as much as you can, obviously. But more than that, even if you don't want to do that, it's fine. But I would almost force you to say the list here, to go and check his YouTube channel out, okay? And you will get such more golden nuggets. You may have to go through his list of videos to, but take notes. Go through each of one of his videos, take notes where it's relevant, and try to apply the same strategies to our markets, okay? So, Johannes, we look forward to seeing more of your work with GoCharting and in the community, and wish you all the best in your future endeavors. Thank you so much.
Any time, the pleasure was entirely on my side.
Thank you to our listeners as well for tuning in. Actually, guys, be sure to check out Johannes's book when it releases. Keep an eye out for more episodes. If Johannes is, if you want him to come back again, please do let us know. Put your comment under this video that if you enjoyed this interview, then please comment below. Ask Johannes to release the course specifically for the GoCharting community and in Hindi. But yes, all of this aside, thank you so much from the bottom of my heart and from the GoCharting team and community. Until next time, happy trading, guys.
Okay, keep in touch and lots of success.